Looking at the energy markets today, continue to see pressure on the crude market. WTI and Brent under pressure. We're seeing WTI down again significantly today, pushing down to that 61.21 level when you look at the December future. The waivers, I think, are the primary driver here. We did get the midterm election. Some have pointed to that as possibly influencing the price of crude, but I think more it's just the idea that the waivers will continue. And we saw what happened when those were announced over the weekend. That put some downside pressure. We're seeing now Japan indicating yesterday they're going to resume oil importation from Iran as well. So Japan now jumping back into the mix. We saw oil come under some selling pressure once that announcement came out yesterday. Continues once again today when you look at what's going on as far as just the supplies across the globe. I think the big question moving forward is now what's OPEC going to do? They had intended to ramp up supplies. Are they going to now shift their strategy moving forward now that it appears that the Iranian oil is going to remain in the market much longer than what the market was pricing in before the sanctions and the waiver was announced? Moving to supply, looking at the API and EIA numbers, again, a significant build over the last couple of days. When you look at U.S. inventories, we saw the API number come out much higher yesterday than expected, followed suit today with the EIA number up around 5.8 million barrels, where the expectation was for an increase of about 2.3 million. So 7 weeks now, we've seen significant builds in the inventories. Again, that's another driving force and possibility why we're seeing oil coming under this selling pressure, that it continues to not find the ability to find a bottom at this level, because again, these news items just keep hitting this market where you continue to see now what appears to be significant oversupply. Looking at the natural gas markets, different story there. Actually, a significantly different story. Low inventories. You're seeing inventories in the natural gas market at 13-year lows, going into what you would consider the extraction period, coming out of the injection period into the extraction period. So we're seeing a much higher level price point. And when you look at natural gas, and again, we continue to see natural gas hold up near the highs of the year, going back to January of this year. When you look at currently trading around that 357 level, we did see it pop up there yesterday. Now 353 on the natural gas D's future. Again, we're seeing significant activity in those futures as well. You're seeing a spike in activity. We saw the big leap up on Monday, where we saw nat gas jump about 8%, and with that we saw a significant jump in futures activity as well. Natural gas moderating here, but still now up on the year. And again, that uptrend looks like it continues to be in play as we're heading into what appears to be cooler weather and into the extraction period at a much higher price point before, as opposed to last year.